Welcome to the Insightful Investor Podcast, a weekly series that seeks to share industry, investment, and market insights. Learn more about our show at insightfulinvestor.org. Today, we have two guests, Young Lee and Asheesh Gupta. Both are senior leaders from Audax Private Equity, a leading private equity platform that manages $19.5 billion of assets as of the end of 2025 and invests across the middle and lower middle market. Audax is one of the most active investors in North America based on new platform and add-on acquisition deal volume. And Audax Private Equity strategies seek to accelerate value creation through the firm's buy and build approach and Audax Value Agenda, a holistic framework that aims to create, enable, and protect value across every stage of the investment cycle. Today, we're focused on Audax's thoughtful and intentional approach to embedding data and generative AI across its organization and portfolio companies. And we'll explore the firm's data and AI philosophy and how it has been able to put all of that into practice. Young is a partner and co-president at Audax, and Asheesh is a managing director and helps to oversee the firm's strategic resources group and leads the portfolio support team within it. Welcome, gentlemen.
Thank you, Alex. Great to be here.
Thanks, Alex.
Let's kick it off. Can each of you share how you came to Audax and provide a setting in terms of the industry, economy, and how all of that influenced your careers?
Yeah, I'll go first. I started back in 1994, the traditional route. Started in finance, working at JP Morgan in investment banking. Found my way to another bank that happened to have a private equity arm. It was called DLJ, and that was in the late 1990s. And was there for a little while and had the opportunity in the beginning of 2000 to join what then was a startup fund. It was Audax that was co-founded by two members that were at Bain Capital. They spun out of Bain Capital in the late 1990s. And I was fortunate enough and had what I thought was a once-in-a-lifetime opportunity to join a private equity fund from the very beginning. And for me, as I think about the reason why I went into private equity from finance, there is, obviously the transactional nature versus being able to work with and see things through. For me, probably even more important and just as gratifying as that has been, what I say is the ability to make an impact and develop and maintain relationships over a very long period of time. And I'd say over the past now close to 26 years that I've been at Audax, the number of executives, sellers, founder owners, team members that now I call good friends today has been really personally and professionally gratifying.
So I joined Young and the team in June of 2008, a handful of months before the global financial crisis. Just as Young mentioned, his background context matters. So I was an undergrad engineer, went to work for, at the time, Anderson Consulting, did 16 ERP implementations, found myself in business school, and wanted to figure out how to really do something slightly different, which was to translate strategy to action. So I love the strategy piece, I love the execution piece, but I really love this translation of strategy to action. So I ended up running the internal consulting team at the Dartmouth Hitchcock Medical Center for a number of years, and then joined Audax in what I call a non-traditional path as part of this group that was getting formed to help partner with our management teams to drive value creation. And so I joined in June of 2008, and you can imagine what happened in the world, the balance of the year, and the upending of what we thought we were going to do and what we had to do. And that became a little bit of this consistent theme that has now played out over the last 18 years.
So when you both entered the industry, what would you say from a high level didn't make sense? And what do you feel like clicked later that kind of put it all together?
When I think about when I entered, Alex, maybe I'll start, is from the outside in, you sort of think about this confluence of capabilities that come together with a controlled buyout strategy. In my view, it always been, wow, this is remarkable. Why doesn't every business that's in the private market end up transacting? And having spent a number of years at Audax, the recognition of the complexity isn't just in the underwrite, it's in what happens after that. It's how do you partner with a management team to build an aligned vision, not just for the next year, for the next 2 years, but for the next 5 or 10 years. And then how do you actually execute that? How do you get the systems, the processes, the talent to all come together to go and drive that execution? And so I'll come to this perhaps later in the conversation, this idea of it's not just what you started with, the what, it's the how. how did you actually execute? And the complexity of the how is what has been a great pleasure to help refine and hopefully get better over time. As you know, Alex, we invest in the middle market, lower middle market. And so it's not uncommon for us to often be the first institutional capital. So just a different set of dynamics that play out when you're partnering with management teams as they go through their journey growing their businesses.
And what you just described, I think, is related to what Young said earlier, which is you came into this business looking for ways to add value, to help these companies grow, enhance what they were doing, potentially do it better, and hit the next level. And so a lot of that has to do with the way you see the world, how you feel like there's shortcomings there that you can assist with, tools and models that you can help incorporate. And those are, I think, all the things we're going to talk about today. If you had to describe your investing style, what are 2 or 3 rules you rarely violate?
I'd say it'd start off with multiple levers of value creation is not relying on one or two things that could go wrong, because inevitably something will always go wrong. So one, the multiple layers of value creation. Two, I'd say value creation levers that are not necessarily dependent on things outside of your control. So where we will try to veer away from are industries or products or services where you're effectively relying on technology adoption or a penetration curve, things that are outside of your control as kind of the one of the major growth factors. And so for us, as we think about that as kind of one of the second rules, the third and probably one of the most important is the sense of partnership and alignment with the management teams. That is something that is critically important. And as I think about those, it's difficult to assign a binary outcome when you're discussing these in investment committee. It's often kind of areas of gray. The nice thing about having multiple, of these rules, or the way we kind of think about it is the restrictions or concerns, it's a complete system. It's like a safety system in a car. If you have seat belts, you have airbags, you have brakes, and all of these different rules, while they're critically important, they're difficult to assign a binary outcome. But all kind of in totality, if you feel comfortable enough with all of those in its totality for an investment, then you can get comfortable around an investment.
Are there any beliefs you held strongly, let's say 10 years ago, about value creation that when you reflect on it today, you feel is either incomplete or maybe even become completely obsolete?
Yeah, Alex, hopefully not obsolete, but incomplete is how I describe it. If I think about 10 or 15 years ago, I think the industry broadly has this notion of value create, value create. I was joking with some of my colleagues that if you were to Google value creation on LinkedIn, you get this staggering number of responses. But if we actually think about what ends up creating value, a lot of it's in the enablement function. How do you enable value creation? And I think getting deeper and deeper into this idea of how do you enable value creation is something that we felt we need to think about differently. So you think about a 5-year journey with a portfolio company, and as you know, those hold periods ebb and flow. What you do in the first and second year is often the enabling function to be able to create the value in the third or fourth year. I have 2 kids, 29 and 23, and I sometimes think about what do they have to learn in the early days to be able to do the electives. So there's like this core curriculum, which is often the enabling function. And I think the amount of energy we put into enablement has been much deeper. And the second piece I'd say is, all of us say management teams. Alex, when you ask us to actually describe the team, we sometimes do a disservice by saying something as reductive as, oh, we hired the wrong CEO. I think that's a very simplistic view. I would say 10 years ago, at least when I joined the firm 17, 18 years ago, we knew our CEOs and CFOs intimately. Today, we think about it as an A3, A5, A7, meaning we know the CEO, CFO, and head of HR. Then you add the head of commercial, the head of M&A. So think about the growth people. Then you think about the enablers, the head of technology, the chief operating officer. And so this idea of what is a team, that definition has also evolved. So I would say it was probably incomplete and we've added more fidelity to it. Because if you just look at where we're wildly successful and where we had maybe a bumpy ride, you start to see this confluence of factors. And there's almost always the early days get enablement right, truly define the team with a perimeter that is broader than the CEO and CFO. And then as Young mentioned earlier, like continue to have that alignment conversation with great frequency because that ebbs and flows as the macro environment changes.
And as we think about, just taking a step back and generally speaking, we often talk internally of time to value. how do we speed up time to value? And I'd say 10 years ago, time to value, how do you speed that up was value creation, and what are the value creation playbooks and the levers that you do. As I kind of fast forward now 10 years to kind of where we are today, a couple of different things, the way I would view and how we think about refining that. It's not only kind of time to value, it's time to realized value. Just as we think about the importance of liquidity, and what's informing or kind of what speeds up that time to realized value is time to decision. And as you think about that time to decision, the enablement, who and kind of how are you going to speed up and minimize your time to decision so that you can get to your time to realize value is how we think about it today versus 10 years ago was a little bit more simplistic.
And Alex, this is where Young pushes me over the years, right? To say, hey, if I need a time to decision, then if you decompose that, I need time to recommendation. For time to recommendation to be comprehensive, I need time to analysis. Time to analysis, I need to have time to the questions because that informs the data that I need. And so as you just decompose that, call it a value chain of a good decision, all the components of that, that's what we try to sort of think about. Do we have all the pieces ready such that we're not making a smaller decision? I say smaller, not in terms of big or small, but just our recommendation set is too narrow. And I think over time, we've expanded our recommendation set, which has allowed us to make better and more timely decisions. And I know we'll talk about sort of how that's happened, because as I mentioned, the word how is so operative in all of this.
And this is where our discussion today and where AI is so exciting.
Yeah, and speaking of AI, which we're going to spend a lot of time talking about today, if you were to take a step back, if you were to start the business today, Audax, starting it from scratch, what would you design differently in the operating model, specifically because AI exists?
Yeah, Alex, this is an interesting question, and I think you fully appreciate. This question comes up all the time in investment committee. Because every time we do an underwrite, somebody says, if you had to start this business from scratch, what would you do differently? And when I think about our business, I am thankful to work at a place where Young and the other partners made early decisions to do two things remarkably well. One, to document processes, not over document, but to document processes of how we did things, to be able to do the scale of what we do. And the numbers that we have, right? We're doing 8 to 10 platforms a year, 100 plus add-ons a year. That's a lot of activity. That's just on the buy side. And then we're selling 8 to 10 companies every year. And so that process orientation in the early days was fantastic. And if you just look at the history of the firm, the partnership coming out of, as Young mentioned, investment banking, but also consulting. We had this balance of people who sort of thought about the world with multiple levers. And the second one was capturing and collecting a huge amount of data. And we do weekly time reporting. We do weekly data from our portfolio companies. And when I think about what I would have done differently, the operating model would have perhaps had even more power if we had collected more what I'd call unstructured data. So for example, Alex, today we have 4 million documents across our SharePoint set. Again, different than a consulting firm, we don't have to worry about all these pockets. We have information barriers and controls, but we have roughly 4 million documents. I think we would have captured a whole lot more unstructured data and emails and chats and all of those threads of conversation. So if you think about in June of 2008, what questions were being asked in investment committee? Alex, that's the questions I wish we had captured. Or the conversations we're having in board meetings, I wish we had captured that. So this idea of like unstructured being not just text, but video, audio, all the things that we capture today, Alex, with, transcriptions or notes that come out of Zoom calls, just think about the power of that. When somebody says, hey, what happens when you have a dislocation? What are the 300 questions that get asked? What's the taxonomy of those questions? You have to have that starting point. That's what I would have probably done differently. Again, not a criticism. We did a remarkable job, but more is always better when it comes to this data construct.
Right, because the AI feeds on data, particularly if you have proprietary data, which could be potentially even more valuable.
Yeah, Alex, the piece I maybe just a subtle add to that is data in context. Like I always think about, do we have data in the context? So what was happening? So the way we describe it to our investors sometimes is, what were we thinking in March of 2020? What were we thinking in March of 2025, right? One was, how do we respond to COVID? And one was, how do we respond to Liberation Day? Those are happening in moments prior to actions actually getting declared. That context is so powerful, right? Because it cuts out all the clutter, you get down to the signal. So data with context, that unstructured piece is very powerful in our view.
Yeah, and I guess that's a way to also minimize the hindsight bias. You want to know what you were thinking, how you made decisions in the moment, and then you can see what the results of that were. And that is a learning moment as well.
Completely. I think this idea that it's going to be somehow be punitive or pejorative that said, hey, you made a mistake, not at all. In that context, none of us are trying to make a mistake. We're trying to take all the data we have and make the best decision we can. But we often, in those situations, will underweight a risk or underweight or under pressure test an assumption. So how do we go back and say, hey, which assumption did we not pressure test? What risk did we think was not real? And what happened 3 weeks later or 3 days later that changed our thinking?
It's human behavior to try to frame the past and past events through things that make sense. And there are biases that can come into play versus having the data and that context. And this is where kind of AI is helping us. We'll get into it in a little bit detail. Can analyze the events and the components of that event in a very clinical way and a non-emotional way.
So would you talk a little bit more about how you can prevent, this massive data set from becoming a bias amplifier that simply reinforces historical behavior?
A number of things. One is if the data set has selection bias in it, then we worry about it. Today, the data set has, as I mentioned, 4 million documents, but I'll just take investment committee memos. So there are over 500 investment committee memos on deals we did and did not do. If we took out the deals we did not do, I would worry, Alex, tremendously about your comment because they would have a confirmation bias of if X, then do the deal versus all the deals we didn't do. One of the data sets that we don't have today in our repositories, if you think about longitudinally the deals we didn't do, what happened to them a year later, 5 years later, 10 years later? Did they succeed? Did they fail? Because that helps you get that context. So one is just making sure you are very intentional that the people who are building the data set have a, let's call it, not an editorial function, they have a data capture function. You collect a lot of data because there's no longer a limitation, storage limitation or cost limitation. Two, you have to have structurally a way to almost always invert, right? If it's the Munger, always invert, or the language we use internally at Audax is a devil's advocate GPT, and Young can describe his usage of that. This idea that whatever the prevailing point of view is or that's being advanced, how do you think about the counter arguments in a systematic way? And that construct is a push and pull that happens. It's sort of, I joke, Alex, when I joined the firm in 2008, I didn't come out of the investing business. So what did I do? For every investment committee memo on the cover page, I would write the 2-letter initials and the questions that were asked. So I would write like YL and I write all the questions Young asked. And this is before we could actually capture that. And I would find that these guys would always take the opposite view. The partners would take an opposite view of what is being advanced. Hey, what if this goes wrong? What if that goes wrong? And I think trying to actually package that up and have that counter view is, I think, a very important piece. And the third one, at least the way I think about it, Alex, is these norms that you have to have. Yes, there's data and technology, but norms are remarkably important. So one example is when a junior team member sees a deal and wants to take all the positives, how do they go to the vice president or the principal and have a discussion and find balance? And then how do they go to the managing director? Then how do they go to the partners? These progressive levels that have existed in our firm for 27 years of how people actually interrogate a deal, how they advance a conversation. And it's funny, if you look at our investment committee memos, I try and drop them into our chat GPT. We have a custom GPT for this to look at the sentiment. And so if you think about an IC memo, there are somewhere between 300 and 500 sentences, narrative sentences that are often in a memo. And you'll find that what we're looking for is not the positive or the negative as much as the neutral comment. We want them to be the facts. Yes, we want to have an editorial, but we want them to be the facts. And what you end up finding is between 50 and 60% of those narratives are just factual. They're neutral statements. There are naturally some positive statements, and then there are the risks. The nice thing today is your ability to identify those risks and say, hey guys, you identified 6 risks in investment committee. What about these 7 or 8 or 9 risks? Why were they not articulated? How they get discounted? So I think this concern that you're raising, Alex, is a strong one. We think very highly about bias amplifiers. In many ways, I actually think about the generative AI tool set is actually a dampening function, not an amplifier. For the simple reason that human beings forget. Somehow selective memory happens when we had bad deals, we don't remember them. But human beings have biases. And I would say that on balance, if I'm comparing a human bias or a Gen AI bias, there's a way to code and dial up and down the Gen AI bias to be as neutral as possible versus the human. And so we find it actually is less of an amplifier. It's more of a dampener function to the conversation where people can go down paths that we may want to be cautious about.
It's a great point, and it is a very valid concern. It's for us, it's something that we have to be constantly vigilant and proactive about training people just natural human behavior of, wanting to hear what they want to hear, using AI as a way to support why they want to do an investment or to rationalize what happened with a bad deal or a decision that didn't go well. For us, the way we like to use AI, my favorite tool, as Asheesh was mentioning, we have to date about 60 custom ChatGPT portals, and each of these portals address a discrete part of the work stream as we kind of think about the overall workflow from deal sourcing all the way through exit. We identified over 100 discrete pieces of workflow where we thought AI could help us be better. To date, we've developed 60 of these proprietary ChatGPT portals that are in use. As an example, an information memorandum comes in and it's used to summarize based on all of the information that we have in our proprietary database set. It's an exercise that used to take an analyst or associate 3+ days to provide an output. It takes us 10 to 15 minutes. Of those 60 ChatGPT portals, my favorite is what we call the devil's advocate. And what the devil's advocate portal does is, as Asheesh was saying, is it asks the uncomfortable questions, the questions you don't want to hear, very clinically based on the mistakes that we've made or pointing out where things have gone bad, with the benefit of all of the data and our experience set over the past 25 years.
Alex, it's funny, like when you think about, biases, there's biases we have, but then biases we express. And I always think about some of this, if you think about 8 or 10 people making a really productive decision, their personalities and history and styles. And when you're doing the devil's advocate, there's no emotion. There's no, I'm going to hurt your feelings, right? And it's sort of it's a pretty clinical response. So it's funny, like when we send the investment committee memo, almost all the partners drop it into a devil's advocate, then they interrogate it back and forth on the devil's advocate. And you can see it because the questions that happen in that room are slightly different. But sometimes people actually joke, oh yeah, devil's advocate said X, Y, Z. It's like, no, you wanted to say it, but you're worried about sort of the interplay of the humans in the conversation, which is natural, right? Alex, like you work with people for a long time, you get those kind of dynamics that you have to keep in context.
And I'm sure you've experienced this, but when it comes out of the devil's advocate, the person receiving the feedback probably has a very different reaction than if it came out of a human's mouth and if it was the exact same words, because you can't get offended by a computer pointing things out like you would versus a human.
That's been our experience. It's been much easier to have that. And it's like we say devil's advocate, that GPT is not written just for an IC memo. I could say, I want to hire this person. Here's what I want to pay them, et cetera. And it's going to say, hey, but what about this? You drop the position spec. So you can apply it to all manner of things. And we've written it such that you drop a document and all you do is hit proceed. And it then says, this document is X. My assumption is you want me to take the opposite side. Please confirm. Yes. And at the end of the devil's advocate, it goes through the whole interrogation. You can also, as share the link with somebody else if you want to have them continue the conversation. Or it asks you, hey, do you want me now to affirm why this is a good decision? And so you can actually play both sides of that conversation, because it doesn't matter if you're saying, I shouldn't hire somebody telling me why I should, or I should hire somebody to tell me why I should. We're trying to figure out how to make sure we have, Young uses the term sparring partner, right? We want a sparring partner, somebody you can go back and forth based on the situation.
But not the type of sparring partner that's going to go and knock you out during the sparring session.
That's right. And, the tone of what I'm hearing is this endless seeking of what the truth is without any biases or historical reference points. You're just looking for what is accurate and what is a truth. And so you want to have a balanced perspective, and using AI can be extremely helpful because of the biases and emotional attachments that humans may have.
That's exactly right.
We've talked about the need for AI fluency at the GP leader level for it to flow through the organization. How do you think about fluency in practice?
So Alex, if I think about fluency applied to a different domain, if I were to take a simple example of, at Audax, we do 100 add-on acquisitions a year. And if you were to ask us, do our senior leaders at Audax have fluency on the complexity of M&A integration? That's born out of many years of doing the work, seeing it work, seeing it not work, et cetera. And when I distill that down, I end up coming to some, the same ideas again and again. One, are you asking the right set of questions, but not advancing some objective? Meaning, are you saying, hey, we're trying to build a better business. That's why we do add-ons. We're trying to build a business faster. That's why we do add-ons. We don't just do add-ons for the sake of add-ons. And I share that in the age of AI because two things I think are true. One, if we're fluent at the GP, then the richness of the conversations we have with our management teams is higher, right? We can then have a conversation about here's how we use it. Hey, how do you think about it? This is not we tell our management teams go use it and we are saying, no, it doesn't apply to us. Because I think that conversation, just within the history of our firm, is to say, how do you think about this? Here's how we think about it. How do you think about it? And sharing that experience is very important. When you think about the word fluency, Alex, I think over the last couple of years, it's gone from, I'll say, proficiency to fluency. And the fluency often is in asking, can leaders identify high value use cases? In the past, it was like, hey, we have a bunch of tools, let's push tools. And it was like a tools forward view versus it is a use case back view. And I think highly fluent leaders ask the question, why can't we do this? You guys go figure out the tools. Let's not debate, is it tool X or tool Y and get enamored of all the tools. Let's talk about, here's a use case, how do we think about it differently? And what we find is in Gen AI in particular, you have to have this catwalk view of an organization very differently than you did previously, because you have to understand all the interlinkage between one team maybe generating data that is going to inform better decision making for another team. And that's how we think about fluency at the GP, is the senior leaders asking these questions in a more proficient way, but trying to be very careful that fluency is not conflated with tool proficiency. Because that's what I worry about, is people like, oh yeah, I use it all the time. I don't know. So you use it all the time. Are you proficient in the tool? Or are you fluent in the use of generative AI? That mindset is what we're trying to advance, is the fluency of this as a capability that cuts across many different use cases, and not being, hey, I got a tool, let's go deploy the tool. And at the end of 5 years, we're going to tell the next buyer, oh, everybody in the firm uses the tool. There's plenty of examples in our portfolio that I've learned where that pushing a tool doesn't actually lead to proficiency or fluency.
One of the other topics we've discussed in the past is the different stages of AI adoption as you progress through that journey. In the first stage, AI often shows up as productivity gains. What's the highest quality productivity gain that you've seen?
I'd say, Alex, today you see productivity gains in those use cases that are highly repetitive. So at Audax, we see over 1,000 confidential information memorandum a year. Reviewing and processing those, as Young mentioned earlier, is used to be a 3-day effort. Very systematic, like output was very clear. What the process would take 3 days. Today, when you can do that in 10 to 15 minutes, just to produce that output, but then ask all manner of follow-up questions, if you apply the same 3 days, the density of what you can do is just totally different. So that's where people have run towards productivity. The way I describe it is in the persona of, I've got somebody helping me carry the load, productivity being, a proxy for carrying the load. That's where people run towards. So when we actually value stream mapped our entire deal life cycle and identified at the time 28 categories and over 100 use cases, we basically said to our early career group, what are the things that you are producing output on, that you think is repetitive enough and is frequent enough that you will see a productivity lift? And so in stage one, that's what we see. And we see that at the GP, Alex, and there are plenty of examples. We see that in the portfolio. Simple things, ticketing systems, one-way inquiries to HR, simple, order processing, thousands of orders that need to be hand-keyed or transmitted. That's all productivity uplift. Those use cases are so easily bounded that you can actually see the benefit very, very quickly. And I say within 3 weeks, you can have a POC up and running, and then obviously the strength of your governance drives how broadly you can deploy that within your organization. But that's what I would say in stage one is very, very easy to see. And we see that in many areas of our business.
And I guess it's also easier to implement because it's almost like using a tool and you can see the immediate impact.
Yes, Alex, there's always the people who are the most curious and the most frustrated that we love to partner with, because they're curious, so they want to try and figure out how to do it better, right? They have this, they're always aspiring, and they're frustrated with the status quo because they think there is a better way. And so when you show them a handful of tools, man, magic happens, right? Because you give them a tooling, what you start with and what you end with. I remember when we built our first custom GPTs, they were 2 pages, 3 pages, Alex. And then you get this like short cycle feedback. And the feedback was, I ran it doesn't do this, not as a criticism, but as an energy for getting better. And so then the team that was building them, now it's like 8 or 9 pages. The prompt is 8 or 9 pages with all manner of permutations. And as you know, Alex, as the technology evolves, you can then stitch them together and do all manner of things. But that's the people that we always seek out, is the highly curious ones and the ones that are slightly frustrated, because they bring a good energy to trying to drive improvement.
So if we move to the second stage, the impact shifts toward better decision making. Would you talk through that?
Sure. Yeah. Look, at the end of the day, when we think about AI, our view is like you got to drive better decisions faster. It's not just faster decisions, it's better decisions faster. And quality will not be subordinated to speed, right? Quality is always the dominant, is the prime directive, so to speak. So the way we think about it is if you think that example that I just mentioned, 3 days now down to 15 minutes, if that means you go off and don't do anything for the next 2 days, that's not a productive use of time. But we got to ask this question: how does the early career group, analyst associates, senior associates, how does their job change? And the answer is they ask a lot more questions, and they ask questions that they typically would have had to hand off to the principal or the vice president to go answer. But now an analyst can say, "Hey, I did the summarization, the analytic work. Here's the 10 questions that I'd love to answer. Can I go off and think about those?" That body of questions, Alex, is where we think the better decision making comes. Because you don't say, "Hey, I'm resource constrained or time constrained, so I can only answer 3 questions." No. You can actually now ask 10 or 12 questions. They have to be the right questions naturally, but your ability to make better decisions is a function of the questions you ask and the data you're able to go and sift through to get to that, again, that same comment from earlier, the signal versus the noise. So we see that early in the portfolio where we find a lot of values. And there's many examples at what I call low profile jobs, right, Alex, those repetitive jobs. It's where we're seeing the impact is in hiring. So in the past, if you had 3 candidates, and I'm talking about C-suite candidates, right? If we're hiring, a vice president of financial planning and analysis, and there's 3 candidates with different profiles. In the past, you would do a lot of interviewing. You would record. Now we record the interviews. We do Hogan assessments. All of that Hogan assessment, the recording of the interviews, the resume, the key accountability scorecard, you can actually package that up to produce a remarkably detailed person by person question. Meaning, if I'm interviewing a FP&A person, it tells me, "Hey, Asheesh, you should ask these 5 questions of this person, different questions of this person, different questions of this person," because it identifies gaps in experience or demonstrate experience. Alex, you can think about that. In the past, you had to be a very expert interviewer to be able to do that. So the quality of a conversation that a vice president is having or a principal is having with a senior leader that they're interviewing in the portfolio, totally different conversation, Alex. You'll hear executives come out often, either I go first or I go last. Somebody say, "Wow, man, that was a full day." You're like, "What do you mean?" So, man, the questions you guys ask some intense questions. And you just see that intensity, the thoroughness of that conversation is totally different than the "tell me a time when XYZ," right? Alex, you just get to that higher fidelity. So many other examples I can share, but those are ones that I thought might be helpful to elaborate, driving better decisions about making a better underwrite and getting a better team and getting a team that matches the mission. We spent a lot of time on that in stage 2.
Okay, so we completed freshman and sophomore year. Now we're on to the third stage. And this is more about the transformation of the operating model, particularly in how companies interact with customers. Would you walk us through a few examples of that?
Yes. So Alex, this is often what we chatted about a little bit here today is this question of, do I have enough data to drive a good decision? And so what we find is in that operating model evolution, you ask questions that are, if I had X, I could do Y. And then this question of what is the friction to get X? If I had more data about the customer, I could target them a bit more effectively. Great. What information do you want? And so again, as context, we're partnering with middle market companies where their sophistication on how they get fidelity of their customers is not as high as it would be for a billion-dollar enterprise. And so those companies often, I don't know enough about my customer. And Alex, you probably know this. There's dozens of tools now that can actually go scrape and build customer profiles very quickly, right? So we sort of joke every time we have a meeting, we're not starting with a Google search. We're starting with a custom GPT search of that person, building an entire profile of that person. So a portfolio company can now go do that for customers such that they can be more explicit in their targeting. This isn't a dial by volume type of construct. It's here's a customer, here's their needs, here's their context. And then the last one, Alex, that's really interesting is how do we find connections? So one of the things that we've done internally at Audax is we take our entire talent database, which today has almost 50,000 executives, and all of our connections to them, meaning all of the interactions we've had over the last dozen years. And so if somebody says, find me an executive in the pest control industry, today we can go find that executive and how we're connected to that person. That's what we're deploying into the portfolio as well. So portfolio companies say, hey, I'm trying to sell to this company. What is the collective wisdom of our network that can be brought to bear? And I share that as a difference of operating model because in the past, we were constrained by our perimeter and we didn't ask the question, hey, what if I had this data? What could I do differently? Today, you can get that data with very, very low friction. So I shared in the customer area, Alex, because that's the most exciting, right? That's the most impactful. We're going to see uplift in revenue and organic growth. But there's all manner of different areas in which the operating model will shift in terms of cost on the cost side as well.
And so if we shift to senior year and the fourth stage, looking ahead to agentic workflows, what do you think is the most underestimated non-technical barrier to making that real?
The connection across the boundaries of an enterprise, Alex. When we think about what's inside your enterprise that we all protect and know, it's how you authenticate across the boundary of that enterprise. It could be even simply with your channel partners. It could be across your customer barrier, across your supplier barrier. Those are the areas where I think there'll be a lot of security and privacy dynamics that will need to get played out over time. That's been our gating function, is how do you actually manage those security information barriers? But I don't think it's a function of the technology not moving rapidly. In 3 years, the question you just asked, I think it'll be a very different answer of how more seamlessly connected we are to a variety of our counterparties.
Would you provide some real world examples of perhaps what this looks like in terms of improving outcomes?
Sure. Yeah, Alex, the way we think about it is, I think there's a use case that I touched on earlier. There's a use case level of ROI. The way we describe it is a functional, and in our taxonomy, we think about it as office of. So the office of the CEO, office of the CFO, office of the chief revenue officer. And then there's at the full enterprise level, right? And you think about that as like a digital transformation type of construct. What happened to revenue per employee, EBITDA per employee at that level? On the use cases, there's lots of use cases. We have a tracker that across our portfolio of 60 plus companies where we track every month what we describe as a library of anecdotes. Where somebody says, hey, I built this capability, this use case, what's the benefit? And so two simple examples. One output is in safety monitoring. We have lots of portfolio companies that have large field-based employees, and safety is a complex topic. And it's one of those things I describe as the data that was being thrown off by those cameras and by those use cases was not being processed as effectively. And today you can process that very effectively. So a safety manager can actually look across hundreds of camera feeds to figure out, is there some systematic issue in a facility or in operations that needs to be addressed? And I think of that as, if it's safety for your employees and making sure you build a better environment as a remarkably valuable construct. In that same category, we have use cases in accounts payable. And those are like highly repetitive, right? Accounts payable, customer support, where today we're seeing all manner of ticketing systems get much more automated than they were previously. And so if you had a human in the loop to do ticketing or to do data entry, that's all being summarized and synthesized. So instead of doing, let's just take 100 data entry transactions per time period, you're now doing 2 to 4 because the system is doing 90+% of them, and you're only doing the exceptions where the errors are. That's the piece that's really exciting, Alex. We're at the early stages of seeing those ticketing systems shift into what we call conversations, right? So it's not a one-way ticket, it's a conversation. So accounts payable, HR, sales, again, those highly transactional, either user or functional use cases is where we see the biggest uplift. As you know, as I mentioned earlier, we want to drive better decisions. We're starting to see a bit of that better decision-making happening. If it's in pricing, if it's in contracting, if it's in terms, the value will accrue, the outcomes will take probably a little bit longer for us to see play through in our portfolio at the organizational level.
Yeah, we're at Calibrate, where we are in the stage with our portfolio companies is we're helping them implement AI to a point where they're getting better and faster answers, but they're not yet at a point where we can use AI to help them get better and faster decisions.
Let me zoom out for a second and ask you a couple questions. How transformational do you believe AI already is today? And how transformational do you expect it to become as the technology improves and, importantly, the adoption broadens?
Yeah, I would describe it as transformational in terms of, if I think about, let me take a very simple analogy. When I first came out of undergrad, I used to go to the Hertz counter, print a map to get to the client site I was driving to. Alex, today, I don't know when the last time I printed a map, right? Like I use Google Maps, I use Waze, like I'm like using that all the time. And I would share that word of transformation. I wish there was like this very bright line that we knew happened. It happened slowly. The number of times I'm talking to ChatGPT when I'm driving in the car, on the drive in or the drive back. That happens all the time. And so when I say it's transformational, it has become part of our ecosystem at our firm to a point where I'd have to think about what would we lose by taking it away. So the word transformation scares me sometimes because it feels like it's like, you went from freshman to PhD overnight. Like these things happen much more in evolutionary steps. But I would say today, the impact, the benefit is material. There's no question about that.
If you think about driving a car, it's not that it's going to be a new mode of transport, at least the way I can think about AI for the near to medium term. But we're going from manual to automatic transmission, from automatic to cruise control to adaptive cruise control. So it's incrementally leading to a better driving experience, a much better, a significantly better and safer driving environment. But I don't think the mode of transport will be different, and you'll still have a driver that's in there. That's the human being.
And is your general sense that we're in the early innings of this, quote unquote transformation?
I think the early innings, this is the analogy that I think we've all probably heard and tried to process, this idea of we have companies born on steam moving to electricity. There'll be some companies born in electricity, right? So I'll give a much simpler example. When I joined the firm, we'd buy companies that were using some ERP system and over time moved to a tool like NetSuite. Today, we're buying companies that are already on NetSuite. So we have to show up in a different way for the companies that aren't going to spend a first year putting in an ERP system because they already have it. Now, just to be clear, it's probably not deployed, it's not fully optimized, et cetera. So the motion has changed. And so I think that's what we're going to see is that where we invest in the middle market, lower middle market, the companies we're buying are either engaged in this topic. They're not proficient, they're not fluent, they're engaged in this topic. They weren't 2 years ago and we're helping them. So we're trying to match each company where they are. And I'd say that is still the early innings. Again, based on the nature of what we invest, we're buying businesses that are almost always getting to a point where they're like, hey, we want to partner with institutional capital or with a firm like Audax because they're going to bring all manner of capabilities to our firm. And how do they do that systematically? And are they going to tell us? Are they going to ask us? Are they going to show us? Are they going to help us? Like, what's the persona with which they show up? So yeah, no doubt, early innings. It's funny, Alex, if you ask that question of people, they've been saying early innings for 30 years. I don't know when you'll ever say we're in the late innings. Has anybody ever said we're in the late innings of that? It feels
No.
for 30 years, people have been saying we're in the early innings on this.
No, the challenge is the innings reference assumes there's a beginning and an end.
Yes.
And it's a constant evolution.
Yes.
Yeah, and interesting enough, and Asheesh, you and I have had this discussion before about the concept of AI and the appreciation that we effectively AI has been prevalent in what we do for a long time, not just in the recent past several years.
Hey, Alex, just on a hopeful note, I hope we're always in this mindset that it's the early innings because the possibilities that conveys is different, right? It's sort of this curiosity, this possibility, and I think that energy. My hope is that we always have that. Oh wow, like we're in the early innings. What else could we do? What else could we do? Right? So we're striving to make our companies better over time.
And it is a good point. Is that as she said, not only are we again using that analogy in the early innings of AI, of what we think the solution set could be with what we know, but using again that same analogy of electricity, where we're even in the earlier innings of is what are the products and services that electricity, or in this case AI, that we can't even think of in terms of solution sets. That's exciting.
You can think of the same thing with the internet. The internet came out and there was an initial use case, and what it actually turned into is far beyond most imagination. So if you look across the roughly 60 portfolio companies that you work with, how do you think about standardization versus customization?
One mental model that has served us well is if I just think about a simple grid type of format where we say there are tools that are horizontal and tools that are vertical. And the way we think about horizontal is like a general purpose LLM. Like across our portfolio, there's a tool set we use, and we think of that as horizontal. And how do we make that applicable? But then because we invest in a number of industries and different business models, I think of business model as really the variable here that matters. Manufacturing, distribution, blue collar services, white collar services, tech enabled services, and tech. When I think about those business models, those have very different use cases by function. So the finance function is going to be somewhat similar, but the customer success function is going to be different. The operations function is going to be different. So what we've tried to think about is how do we get the horizontal layer really solid? And we on the vertical, we want to get proficiency, but those each company needs to build capabilities. So what we've tried to do is build I'll call it standard of saying, hey, welcome to the Audax portfolio. Here's a starter kit. We call it an enablement kit, an Audax enablement kit, where we hand them today, it's 14 GPTs. We say, hey, here's 14 GPTs that you can use that we have built, and you can go deploy them in all manner of places. So guess what? It includes a prompt writer GPT, a devil's advocate GPT, a candidate review GPT, all the things that any management team that we partner with we think would benefit from, right? How do you compare Ops Review Deck 1 to Ops Review Deck 2, et cetera, all of those things. And because we hand that to them, it's a little bit like we used to 10 years ago. Welcome to the Audax portfolio. You're going to accelerate your growth through M&A. Here's a 1,300 line M&A integration playbook. Now let's customize it to your business model, to your types of dynamics. It's that same idea, Alex, is that start with a package and then customize to the situation on the horizontal layer. And we found that if you get that horizontal layer done right, then each functional leader says, hey, I'm doing this, but it's not perfect. I think we should find a better solution. And then they go down their vertical path that is much more bespoke and much more relevant to their industry or their domain, where it's a different expertise. And so that balance between a horizontal thinking and a vertical thinking has served us well. It hasn't been this like, hey, just go do Gen AI. That's a little hard to unpack, Alex, but this deconstruct has helped us split between standardization and customization.
And I think that the philosophical overlay for us as a firm, as we think about our approach in partnering and collaborating with our portfolio companies and management teams, is it is what we call a pull, not a push model. And so, to answer your question I don't think we would ever be in a situation where we're forcing, a common set or one set of use cases or how they should be using AI. I think for us, the importance of that pull of wanting to have them, ask and to pull in the use cases for how they want to use the tools, which is why it's so important for us, in our journey, as Asheesh had mentioned, for us internally at the GP and within Audax as a firm to have gained that fluency within AI and that credibility, so that when the measurement teams are asking, well, how are you using it? Are you using it? We can show them successful use cases. We can put them in touch with other portfolio companies and management teams who've had the successful case studies, so they can make that decision and they feel that it's truly in the best interest of the company and the partnership, versus having them feel like we're pushing something that they don't want.
This is an important piece because I think part of our mental model has been, how do we create a forum for that dialogue? And so one of the things that we have at Audax is what we call Audax Communities of Practice. We have 3-letter acronyms. They're called ACPs. And so these communities of practice are where we bring leaders together. And so we have a generative AI ACP. It meets every month. And we invite portfolio company leaders to share both things they've done well and questions that they have. And it's in a forum of their peers. So we facilitate that. We seed it with some ideas. But that give and take that happens in the room, Alex, it's a little bit of calibrating across a 60 company portfolio where people can say, wow, you guys figured that out? How do you figure it out? What are the stumbling blocks you had? And you have that habit of every single month, let's jump on a quick call for the ACP. And we do this across many things. We do with CEOs and CFOs and CIOs, but generative AI has been one of those multidisciplinary areas where that cross-pollination, that sharing of best practices has really come alive over the last couple of years.
And all of this goes back to where we started our conversation with the objective of enabling these companies to grow. And these are tools and philosophies and frameworks that you're helping incorporate within their businesses.
Absolutely.
So when you're deploying some of these AI tools across portfolio companies, have you noticed any adoption patterns that tend to predict long-term success?
Yeah, Alex, maybe 4 things I'd mention. I think there's no substitute, as we know, for a strong leadership sponsor. When Young says he's using the devil's advocate, guess what? Everybody at the firm's using devil's advocate. Like, it happens, right? We know this. If the senior leaders use it, it actually just pulls the construct forward. So one is just executive sponsorship and demonstrated usage. 2, we find that if you can find the curious users, right? We call them power users, Alex, because that's a term that got coined. I wish there was a way we could say, let's calibrate curiosity. The curious users are the ones we want. They're a little bit frustrated with the status quo, but those curious users, you got to go find them. You don't deputize them, you find them. And I say that very intentionally, Alex, because sometimes we're like, oh yeah, hey, it's going to be this person, this department. No, 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 no. Go find that person. You have to be intentional about finding the curious user to then make them a power user. Number three, have a weekly cadence. I think monthly calls, quarterly calls, interesting. A weekly cadence just becomes a heartbeat of, hey, what did we do last week? What are we going to do next week? What did we do last week? What are we going to do next week? Is very helpful. And the last one is, in the age of everything is available at a couple of clicks in Google, actually having a human to human sharing. The idea that somebody says, hey, this is what I built. What do you think? Hey, you have a problem? Hey, would this problem apply? And so that idea of creating those forums of sharing, and people call it playbooks. I love playbooks. Playbooks are often a starting point, but then you have to call the plays. You have to modify the plays based on the situation. But finding those areas where you can actually have that forum for sharing. And that's why we've tried to think really heavily about the fourth one not being restricted to a portfolio company, but being across many, many portfolio companies to be part of the conversation. But you got the right leadership, the curious user base, a weekly cadence. Alex, the governance, and weekly cadence I share because that's in all things that we do, right? It's things we do at the firm. It's so we're doing add-on integration. We have a weekly cadence. And then that best practice sharing, that idea of give and take. We found those four things, you get to some pretty remarkable outcomes very quickly.
You've talked about the devil's advocate GPT, but you also briefly mentioned the prompt writer GPT. Would you describe that and how it resonates with portfolio companies and with yourselves?
Yeah, Alex, it's one of those things that if you think about the last 3 years, right, the titling has all changed. People would say, oh, I need to hire prompt engineers, right? And people are like, oh my God, what is a prompt engineer? And one of the things we find is that you have to try to demystify some of these topics. So we wrote the prompt writer such that anybody who says, I've never written a prompt before, how do I write a good prompt? Because when people say this hallucinates or doesn't hallucinate, we all know not a poor prompt and a good prompt will have differences in hallucination. And any individual's confidence is, how should I say, it's fragile. So if you build a prompt writer, you basically allow them to say, hey, I've never done this before. Let me do something. Let me build confidence. And then surprise, surprise, you get momentum because they built a good prompt. As I mentioned earlier, they show the prompt. They say, hey, I built this. You're like, wow, that's a really interesting idea. Hey, let's evolve that. Let's develop it together. But that prompt writer takes away this like high hurdle. Think of it as like the catalyst or the activation energy to get people to start. That's how we've thought about that piece. And that's why we wrote the prompt writer and the devil's advocate very, very early on, because we found that senior leaders would engage differently. Senior leaders aren't going to write 300 GPTs. That's not their MO, but they're going to ask for 10 or 15 GPTs if they understand the lack of complexity in that, but you have to get started. And that's what we also spend a lot of time thinking about is enabling is one thing, but you got to build momentum. How do you build momentum? How do you build confidence? That's at least how we've thought about it.
I guess one way to think about it is long ago, you needed to learn the language in order to get some of this output. Now it's reduced to common English, but there's still a level left where you need to ask the right types of questions. You need to prompt it correctly. And this is a tool to, I guess, bridge that final gap.
That's right. That's right. Because that feels like that's the friction that's left, right? Alex, if somebody says, hey, how do I get started? But also, if somebody wants to build something and wants to have confidence to share it, we find it's a little bit like doing your work and making it available for the whole organization to see. You're a little bit hesitant about that. And the prompt writer gives you a little bit of that packaging. So the deliverable you share actually is at a good, healthy spot, right? It's not a overly raw document.
What's the most counterintuitive thing you've learned about getting roughly 300 people internally to genuinely use AI as part of the firm's culture?
It is so much more about the behavioral piece, Alex, than it is about the tools. I'll give you an example. 2 years ago, on my iPhone, I replaced the spot in which I had my Google app. That's all I did, right? I just removed that from that spot. And I was so conditioned over so many years when I had a question, where did I go? And so I replaced that on my phone. Surprise, surprise, my use case library went from one set of tools to another set of tools. I got much more engagement. I had a way to save it, a way to share it. And I share that because I think as long as we keep in our minds that this is a tool that needs to be deployed in an organization, the organizational context matters. And so to keep that aware, and then obviously we're human beings inside an organization, we all have our own dynamics. That was the piece that I would say is more counterintuitive because it felt like, look, build the tools, everybody's going to say, oh my God, this is fantastic, and they're going to come rushing towards it. But there is a little bit of subtlety to how you actually get people to engage. And I think that, I wouldn't say counterintuitive perhaps, but it has been a little bit of that surprise of, wow, that's a very slight and seemingly easy adjustment, that has a lot of benefit. And so guess what? A lot of our teams have made those kind of changes where it becomes the default setting in a number of places, and the use cases jump and it just feeds itself.
Yeah, I think it's amazing how just the conversational element of it versus your standard internet web browser search engine. I think the users that were latest to the adoption were the ones that said, "Well, I don't need it because I don't need it for I'm not doing that complex analysis. So I don't need it for this complex task, or it's too complicated, or it's too clunky." And so what Asheesh said is what we've been doing selectively with some of the more, I'd say, persistent non-adopters, is just subtly replacing their web browser on their phone with the ChatGPT. And it is almost instantaneous when they start using it for the simple web searches, just given the conversational element and the interactive of it, how quickly they adopt and realize, that light bulb moment. So it's been fascinating to see.
It sounds like what you're describing is just incorporating it into the daily habit. And to break in isn't easy, but once it's in there, then it builds momentum.
Organizational rituals are funny, Alex. They take a long time to establish, and just because you buy a bunch of tools, the organizational rituals don't suddenly change. And it doesn't matter if it's at the GP or in our portfolio, right? You have to sort of be cognizant of that in all things, not just generative AI. It's how they do pricing, how they build their sales teams. It's in all things, and I think that those first principles don't go away.
Do you ever worry about AI becoming a crutch?
I think this is a concern that we have to be intentional about in how we train folks. And I sort of reflect back on, you may remember, so again, as I mentioned, I have two kids, right? 29, 23. We used to joke about the Google effect, right? Kids didn't have to remember anything because they just had to remember, oh, if I can find it on Google, I don't need to learn it, right? And I think that can be a challenge. But I think it comes back to our conversation about, is AI your assistant? Is it doing all of your work? Or is it a collaborator or a sparring partner, as we've talked about? And I think when you put it in that persona, you can't escape the conversation that happens in a room if Young asks vice president or principal, what do you think about this deal, right? That's a conversation in his office. If somebody said, we're not going to do those conversations, then I would worry. Yes, you just have people producing output that they didn't understand. But because you have to have that interrogation moment back and forth, I think that's how we try to figure out how to mitigate the AI tool usage becoming a crutch. Alex, the reality is also with any of these tools that leave a digital fingerprint or a footprint, you see the usage, and you see the usage data and the adoption data, and you end up finding the correlation to performance with certain folks where they're high users, but they're struggling in the dialogue or they're not producing quality output. Like, this is just another data point that our talent team can use to say, high user, but not performing, what's the disconnect? Are they not understanding it? Are they not engaging in it? So is it a concern? Yes. And how we intentionally respond to that concern is one that we've thought about, for, again, 2 decades, as different tools have come in and replaced the proficiency of the user.
If you could leave listeners with one practical mindset shift about AI, what would that be?
I think it's similar to what we were talking about before with the Asheesh, which is AI is not a tool. It's certainly not a crutch. The most important use case of it is treating it as a teammate or that sparring partner. And Alex, I think you had said it first, which is the most important thing as we think about AI, because AI ultimately, it's not going to replace judgment or context, or within what we do in private equity, the human element of developing trust, chemistry, leadership, as we think about it. And even at a higher level, philosophically speaking, questions around reputational judgment, moral judgment, ethical judgment. AI is great with the quantitative, repetitive, and it'll answer based on the objectives and the frameworks you give it. But there is no one set of framework around any of those philosophical areas that I don't think we could ever trust AI to be. At least at this point, I can't think of anything. But it really is. It's, for us, AI as a tool to help us seek truth.
Very well said. Well, Young, Asheesh, I appreciate you joining us, sharing all your insights and all of your experience in this area. I've really enjoyed it. I've learned a lot, and I hope our listeners did as well. Thank you.
Right. Very much enjoyed. Thanks for having us, Alex.
Thank you, Alex.
Thanks for listening. We hope you enjoyed this episode. Please visit our website at insightfulinvestor.org to access past shows and learn more about our podcast. If you have questions, feel free to email us at info@insightfulinvestor.org. And if you enjoyed the discussion, please subscribe to this podcast to ensure you don't miss future episodes. And don't forget to forward today's conversation to others you think would enjoy listening. Important information. This podcast is provided for informational purposes only and should not be considered legal, tax, investment, or business advice. It is not a solicitation, recommendation, or endorsement. All opinions expressed by participants are their own and do not necessarily reflect the views of the Evoke Advisors Division of MAI Capital Management, LLC, or Evoke, its affiliates, or any companies mentioned. Information shared has not been independently verified by MAI or its affiliates. MAI Capital Management, LLC, or MAI, is registered with the U.S. Securities and Exchange Commission, SEC, which does not imply any particular level of skill or training. Certain information contained herein has been obtained from third-party sources, and such information has not been independently verified. No representation, warranty, or undertaking, expressed or implied, is given to the accuracy or completeness of such information by any person. While such resources are believed to be reliable, Evoke does not assume any responsibility for the accuracy or completeness of such information. Evoke does not undertake any obligation to update the information contained herein as of any future date. The content is intended for a general audience and does not constitute a recommendation to buy or sell securities or adopt any investment strategy. Any examples or scenarios discussed are illustrative only, involve risks and uncertainties, and do not guarantee future results. Non-traditional assets carry significant risks and may not be suitable for all investors. Decisions should be based on individual objectives, risk tolerance, and circumstances. Statements herein are general and may not reflect an individual's or entity's specific circumstances or applicable laws, which vary by jurisdiction. Further, speakers' views are personal and may differ from Evoke and MAI recommendations and are not specific investment advice, and do not consider client objectives, risk tolerance, and diversification. Guests may have current or past relationships with Evoke and MAI, its affiliates, or the host, including as clients, service providers, or business partners. Participation does not constitute an endorsement or testimonial. No compensation has been paid or received for guest participation unless disclosed. MAI and its affiliates may have business relationships with entities mentioned in this podcast, which could create potential conflicts of interest. These relationships may include advisory services, investment management, or other arrangements. MAI seeks to manage such conflicts consistent with its fiduciary obligations and policies.